We're coming off some record closes, also in between 2 days of Jay Powell testimony. How do you see today shaping up? What's your WEX word of the day?
Yeah, our word of the day is melt up. And the reason being is all eyes have been on the Fed. All eyes have been on when interest rates are going to come down. There's still so much money that's sitting in cash right now. There's over $6 trillion. The idea is at some point in time, you're going to see that money come back into the markets as there's no other alternative once interest rates come down. With Fed being testifying this week, you're seeing that that's becoming more and more likely. And interest rates are going to come down sooner rather than later. And all of this leads to that money likely going back into the momentum trade. Though this is not what we're chasing right now. What you are seeing is investors are just putting more and more money into the Mag 7, into your large cap tech funds. Even just saw large cap funds in general, which are heavily skewed towards that Mag 7, just are the largest inflows in about 16 weeks. So people continue to chase that. And I think you're going to see that more and more as the expectation comes in that interest rates are going to come down in the near future.
You know, Courtney, that's interesting. So you believe that if we get a rate cut sooner than later, or if Jay Powell turns more dovish, that's going to put more money into mega cap tech. But all year long, people have been saying the closer we get to rate cuts, the more that money is going to go into the cyclical trade.
And that's what you should be doing, because longer term, that's what the trade is going to be, right? You want to be putting your money to the places that are going to be doing well, not necessarily right here in the here and now, but what's going to be doing better next year. So that's where you want to look at the earnings expectations that are expected to have really significant improvements when you're looking at 2025, 2026. So when we're allocating our capital right now, we're looking at things like materials, things like financials, things like energy. Short term, I don't think that momentum trade's going away. Long term, you are exactly right. You want to be adding your money to other areas of the market.
All right, I'm going to get to 2025 in just a second and looking further ahead. But right now, I want to focus on 2024, specifically the upcoming election. I know you've been getting a lot of calls from clients about the upcoming election. Are you advising them to make any changes to their portfolios or investments based on some of the shifts that we've seen in polls and some of the outlook on who's going to be the candidate?
We're not. This can really be a dangerous game. And I get this question every 4 years. But historically speaking, the presidential election does not have as much of an impact on the stock markets as really the news wants you to believe. So it really can be a dangerous game of trying to trade one thing or another. You're seeing a lot of things, especially post-debate, where there was certain categories like think of energy, think of healthcare that started to do a little bit better with the assumption that if Trump was going to be in office, as the betting markets were saying he was going to be, those things tend to do better with the idea that there's going to be less regulation. I would not be chasing some of those trades, but I do think some of those theses work regardless of who's in office. Like energy, for example, as you're seeing these data centers that are needed, this AI revolution that's happening, this manufacturing reshoring that we're seeing, all of that is going to be positive for the energy trade regardless of who's in office. So I would look at trends like that as opposed to who's going to be in office, because we don't know who it's going to be. And regardless, it can be a dangerous game when you're trying to invest around that.
All right. I want to go back to your thesis about looking ahead to what's going to work in 2025. You're actually looking at one area, the material sector. Big laggard. It's a cyclical, as we mentioned before, big laggard. And the stock you like in that area is Freeport-McMoRan. But that's kind of a copper trade tied to the AI data centers. Why do you like materials right now?
Yeah, materials are one of the sectors where when you're looking at earnings expectations, that's one that's actually going to continually lag the rest of the markets this year, but have a big bump. They're looking at double-digit earnings increases when you're looking into 2025. And that's really the important thing here. It's not what's happening today, it's what's happening tomorrow. And a lot of this has to do with kind of what we're talking about on the energy trade. As you're seeing things like manufacturing, reshoring, you're seeing a lot of money going into infrastructure. A lot of that is going to benefit your materials. So this is, again, something that's happening tomorrow and something you want to invest in today before that trend happens.